Have you ever wondered what really backs the money in your wallet? Is it just paper and ink, or is there something more? Today, we're diving deep into an age-old battle, gold versus paper money. It's a clash that defines financial history and could determine your financial future. Stick around, because what you're about to learn might change the way you see wealth forever. Let's start with a simple, yet staggering fact. The cost to produce a $100 bill is just a few cents. Compare that to gold. Extracting a single ounce of gold requires immense effort, heavy machinery, and significant investment. One is created out of thin air. The other is forged from the earth. This fundamental difference is the starting point of our entire discussion. Paper money, or what economists call fiat currency, has no intrinsic value. Its value comes purely from government decree and public trust. Gold, on the other hand, has been valued for its beauty, rarity, and utility for thousands of years. It doesn't need a government to tell you it's valuable. It just is. Now, let's talk about a silent thief that lives in your bank account. Inflation. Every year, your paper money buys you a little less than it did the year before. This isn't an accident. It's a feature of modern economic policy. Governments and central banks can print more money whenever they want, which dilutes the value of the money you've already saved. Think of it like adding water to your soup. The more water you add, the less flavorful it becomes. Over time, this slow erosion of purchasing power can be devastating to your long-term wealth. $1 from 1970 is worth less than 15 cents today. That's a staggering loss of over 85% of its value. Gold, however, plays by a different set of rules. Its supply can't be increased with a keystroke. This inherent scarcity makes it an incredible store of value over long periods. While the price of gold fluctuates in the short term, its purchasing power has remained remarkably stable for centuries. An ounce of gold that could buy a fine suit in Roman times can still buy you a fine suit today. Can you say the same for any paper currency that has ever existed? History is littered with the graves of failed paper currencies, from the Roman denarius to the German papier-mark to the Zimbabwean dollar. Time and time again, when governments have the power to print money without restraint, they eventually do, leading to hyperinflation and economic collapse. This brings us to a crucial concept: counterparty risk. When you hold paper money, or even digital assets like paper gold, think ETFs or futures contracts, you are relying on a third party to make good on their promise. Your bank account is a promise from the bank. An ETF is a promise from the fund manager. But what happens if that bank or fund fails? You could be left with nothing. Physical gold, the kind you can hold in your hand, has zero counterparty risk. It's a direct, tangible asset. Its value doesn't depend on any institution's solvency or any government's promise. In a world full of complex financial instruments and interconnected risks, the simplicity and security of physical gold are more appealing than ever. So why do we use fiat currency at all? The simple answer is convenience and control. It's much easier to carry a credit card than a bag of gold coins. And for governments, fiat currency provides a powerful tool to manage the economy, fund spending, and respond to crises. They can stimulate growth by lowering interest rates and increasing the money supply. This system is backed by the full faith and credit of the government, its military strength, its power to tax, and its political stability. For a stable country, this faith can be very strong. But as we've seen throughout history, no government is permanent, and no empire lasts forever. Critics of the fiat system argue that this power to create money out of thin air is a recipe for disaster. It encourages debt, creates boom and bust cycles, and ultimately leads to the devaluation of the currency and a massive loss of purchasing power for ordinary citizens. This isn't a fringe theory, it's a historical pattern. Every fiat currency in history has eventually returned to its intrinsic value: zero. Gold, on the other hand, has never been worth zero. It has outlasted every kingdom, every empire, and every currency. This is why gold is often called the ultimate safe haven asset. When economic storms gather, when markets become volatile, and when geopolitical tensions rise, investors flock to gold. Look at its performance during major crises. During the 2008 financial meltdown, while stock markets were plummeting, gold held its value and then soared. During periods of high inflation, like the 1970s, gold's price skyrocketed, preserving wealth for those who held it. Its tangible nature provides a sense of security that digital or paper assets simply can't match. When trust in institutions and governments wanes, trust in a physical, universally recognized store of value rises. It's financial insurance against the unknown. Think about it this way. Fiat money is a claim on wealth. Gold is wealth. One is a promise, the other is the real thing. While paper money is the currency of states and governments, gold is the currency of the world, transcending borders, languages, and regimes. Its storied history isn't just about ancient kings and treasure chests. It's a continuous 5,000-year-long track record of preserving wealth through every imaginable type of crisis. So what does this mean for you? It means understanding the fundamental differences between these two forms of money is crucial for your financial well-being. It's not about abandoning the modern financial system and hoarding gold bars under your mattress. It's about recognizing the inherent weaknesses of a purely paper-based system and considering how a time-tested asset like gold can bring balance and security to your portfolio. It's about diversifying your wealth, not just across different stocks and bonds, but across different types of assets altogether. The battle between gold and paper is not just a theoretical debate for economists. It's a practical reality that affects your savings, your retirement, and your family's future. By understanding the roles they play, paper money for transactions and gold for wealth preservation, you can navigate the complexities of the financial world with more confidence and wisdom. You can protect yourself from the silent theft of inflation and the potential instability of a system built on promises. The choice isn't necessarily either or. A smart approach might involve using fiat currency for your daily life while strategically holding gold as a long-term store of value and a hedge against uncertainty. In the ongoing battle for financial supremacy, perhaps the wisest move is not to pick a side, but to understand the strengths and weaknesses of both and build a financial fortress that can withstand whatever the future holds. Thank you so much for joining me on this deep dive into the world of money. I hope this gave you a new perspective on the dollars in your pocket and the value of real, tangible wealth. If you found this information valuable, please give this video a thumbs up, and don't forget to subscribe and hit that notification bell so you won't miss our next exploration into the world of finance. We'd love to hear your thoughts in the comments below. Are you Team Gold, Team Paper, or somewhere in between? Thanks for watching, and we'll see you in the next video.